I'm Charlotte McLeod with the Investing News Network, and here today with me is Lawrence Roulston, Managing Director at WestBay Capital. Thanks so much for being here today.
Oh, great to be here, Charlotte.
Great. So let's jump right in. I think last time we talked was toward the end of 2019. You mentioned then we were at or near the bottom of the market and smart money was positioning. I wondered what your take on the market is right now, given recent activity. Are we still in a positioning phase?
Absolutely. The smart money is still very aggressive. I'm talking people like Eric Sprott, guys that know this market very, very well. They've been through the cycles. They know they should be buying at the bottom. So those kind of investors are very active in the market. Now, the retail investors have not yet come back in a big way. Clearly, there is some activity. Some companies have done very well. Great Bear is one example where, the retail investors have, they're very excited about the company and push the price significantly higher. But this market is very different than anything I've seen in the past. It's not moving in unison. Individual companies are moving based on results, but we're not seeing that whole tide rising kind of situation. And there's a lot of investors out there that are heavily invested and waiting for their companies to come back. And I'm not sure that some of these companies are ever going to come back. I hate to say it, but we're in a situation now where smart money is looking hard at companies and making individual investment decisions on particular companies. And the tide is not rising yet, and I can't say when that's going to happen. And then, of course, the events over the last few days have really upset the market. I think rattled some people. But look, this is a situation that's going to pass. We went through SARS, and at the end of it, I don't know if anybody can even remember the SARS thing. But at the time, there was as much almost paranoia as we're seeing now, and then it just went away. I think we're going to be in the same situation here. And stocks that are down because of this, it represents an incredible buying opportunity at this time.
Ask about indicators that investors can watch to better understand where the market is going, because talking to people here, a lot of people are very confused about what's going on. It sounds like it would be very difficult to try and predict pretty much anything right now.
And I agree totally. It's very difficult to predict anything other than this market, the resource market in general, is very cyclical. And it goes down and it comes up. And right now we're definitely at a downtime. There's a lot more upside potential and downside risk. But again, to be very cautious about looking at individual companies and not just jumping in and buying a company because it has gold in its name or whatever other measures some people might use. So you've got to look very carefully at individual companies and what those companies are doing in terms of achieving, steps to add value and getting investor attention.
So you mentioned the market is cyclical, which we know the resource industry is very much like that. A lot of people are talking here, they're making comparisons to 2008. I wondered if you see right now during this downtime, is it going to turn into a full-on market crash or economic downturn?
I don't believe so, and it comes back to this point about, the concern right now is the coronavirus. And so there's been a huge, reaction to that, and I think yesterday we saw kind of a correction to at least a partial correction where people are recognizing that it's probably not going to be an overall market correction. But, not necessarily jump in today or tomorrow, but, watch the market. If it starts to stabilize, then there's incredible buying opportunities available at this stage in this market.
Really tied up in all of this market activity. I wondered what you think the most important drivers for gold are right now, and perhaps what the price potential could be going forward.
Well, there's so many variables that impact the gold market. And, uncertainty impacts the gold market. It's the flight to security. But the other side of that is when times are tough, and we saw a bit of selling in the gold market because people needed to generate liquidity.
Right.
To cover other situations. If they had a margin call, for example, they might sell some of their gold, which is one of the main reasons for owning gold is it provides that store of value, that security. Um, Look, I've been asked for decades now, while I was doing the newsletter and all the rest of it, about outlook for the gold market. I continue to believe that the gold price is going to at least maintain its value in real terms. And beyond that, it's going to be up, down, and sideways. So the way I've always played the gold market is own a gold equity that has a good business case, and then as the gold market improves, you get an added bonus to owning a good solid investment.
So gold is getting quite a lot of attention right now, but what other metals are you watching or interested in at the moment?
Well, silver,
Right.
very much so. And silver generally has been more volatile than gold and provides bigger upside spikes than the gold market does. So I would play silver exactly the same way as gold, and that is own a good silver equity that has a business case, and then benefit from the silver price when it eventually spikes up again. And another commodity that right now is very interesting is palladium. And the palladium price is at an all-time record high, a price nobody dreamed it would ever achieve, and it's there for good solid reasons. It's an industrial metal more than it is a precious metal, and demand is just outstripping supply. And so very, very few ways to play palladium, and that's one of the things that makes it really interesting. Now, one of the companies I'm involved in is Palladium One, and the reason I'm involved in it is because it is one of the very few palladium stories, and it's something that I had a good hard look at and was very excited about. So I took an active involvement in the company. I think there's huge potential yet for palladium, and certainly for the few companies that are in that space, it's going to be a very exciting time.
Yeah, I was going to ask you, you've been mentioning all the opportunity that is there for good companies right now, and maybe you can bring it all together as we come to an end here and talk about what you're doing right now, where you're looking, and how you're, I guess, deploying your money right now, what kinds of things you're looking at.
Well, one of my biggest involvements is Metalla royalty. The royalty space generally has been a great place to be, you know, in good times and bad, and over the last couple of years, it's probably one of the best places to be. And Metalla Royalty was the best performing royalty company in the industry, so that's been a very exciting company to be involved in. I'm also involved in a couple of juniors with exploration projects in the Golden Triangle.
Right.
And again, I'm involved in those companies because I'm very excited about the opportunities. They're incredibly exciting exploration projects in one of the most prolific mineral areas on the planet. And those companies are called Oramex and Mountain Boy.
So that's what you're doing. I want to close with a question on advice for investors. It's a tricky market right now. People can get afraid very quickly. They don't know what to do. So what's your advice for navigating this situation? How do you stay calm and make sure you're doing the right thing, or at least try to?
Well, unless you're putting a lot of time and effort into researching and monitoring these companies, you really need to get some professional advice. So there's some great newsletters out there, you know, some of which are still very objective and independent. So get, you know, one of those newsletters to provide some input. A few of the brokerage firms still do some reasonable research, but the brokerage firms tend to go for the larger, less volatile ones, the ones that are not as much fun, quite frankly. So it's hard to, you know, coming to events like PDAC and the other investment conferences, a fantastic way to get face-to-face with the management of the companies. But you've got to look beyond the superficial aspects of the company. You've got to do some digging, you've got to get in them and understand them, and make sure that they have a solid business case that isn't just dependent on a move in the commodity price.
Great. That's great. Unless there's any final words you want to leave people with for today as we head into 2020.
Well, the most important investment advice that I or anybody else can give investors is buy low, sell high.
Right.
And unfortunately, in the resource space, most investors tend to do the opposite.
Yeah.
They come in at the top of the market, and then they panic and they bail out after there's been a big decline. And the people that make the money are the ones that come in at the bottom of the cycle when it's really out of favor. And then when at the top of the hype, take some profits. Lock it in, move on.
Okay, well, thank you so much. We'll leave it there. It's always great to have you. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Lawrence Roulston.